Thank you very much for joining us. Also join us for Facebook Live later on this afternoon as we'll be talking about these markets and what we saw here today. And in just a moment, we're going to check in with Brian Hoops to get what he thinks about what these markets are doing and what he's hearing from South America. But first, let's get you up to date on the futures numbers. The corn market down 2.5 for March, 380.5. The December down 2 3/4 at 390.5. In the soybean market now, all of these contracts are on the higher side after getting out to a weaker start. And March is leading the way higher, 4 3/4 cents higher, 8.97. May is up 3. September is up 1 at 918.5. Chicago wheat for March down 3 1/4, 563.5. The July is down 3 pennies. Kansas City wheat for July down 7 1/4 at 492 3/4. And Minneapolis wheat also on the lower side, 4 3/4 lower on the July contract. However, cotton has been able to set itself aside from all of that. Now we're up 87 on the March contract, up 102 on the December new crop at 70.46. So, Brian, first of all, what are you hearing from the South American harvest? A little bit ago, meteorologist Tim Ross was talking about some of the weather that they've had, some rain, but didn't seem to be slowing their soybean harvest down too much. But the reason that is important is because of what happens after soybean harvest, and that's the safrinha crop.
Yeah, exactly. Good talking with you, John. We've got a little bit of rains in parts of South America, but it looks like we could see even more rains coming in the forecast in north central part of Brazil. That's a little concerning to the trade, where we may see some more harvest delays. We saw a rally last week on some potential delays, and we're seeing a kind of a bounce here in these front month soybeans again as a result. That the forecast is a little concerning that we may have some sort of a delay. But the Brazilian real is posting new lows here again this morning. Farmers are pretty willing sellers out of South America, so I don't know that we're going to see anything more than just a small bounce here at this time in the soybean market.
Okay, what about the rest of these, the rest of this complex then? We talk about corn and wheat, what a difference one day makes. And that Kansas City wheat continues today to be widening that spread on the Chicago with a discount.
Yeah, and that spread may just continue to widen on out with the Chicago gaining against the Kansas City market. It's been in that situation for a year now. I don't see that changing anytime soon until we get into maybe some new crop harvesting numbers and we can get more supplies of that Chicago market. But that's several months away. Texas is one of the few states that is updating winter wheat conditions. Those conditions improved 11% from last week as they've had some abundant rains through Texas. And so their conditions are improving. They're above last year. And I think that did weigh on the Kansas City market this morning. But corn, just a complete follower of what the wheat market is doing. Sharp gains yesterday in wheat spilling over to corn, and reverse effect today, dragging corn lower as this market's just range bound and really has no direction of its own.
Brian, I know you talk to a lot of producers in your business, and we just heard from Grant Waterman, a custom harvester, who was talking about the issues they're still having in North Dakota trying to get that crop out. Is anybody still talking about this potential delay in planting this year, or maybe prevent plant?
A lot of producers in the Dakotas certainly are. There's a lot of talk that there will be a lot of acres that'll go back into prevent plant this year. Just going to be almost impossible to get the crop harvested, get fields ready and prepared to plant on time. Some fields are actually still saturated from last year. They just never dried out, or they have water standing all through the winter months, and it's just going to be a real chore for some of these areas in parts of Nebraska, North and South Dakota. They're going to really struggle. If we're going to see heavy prevent plant again in 2020, those are going to be the states that likely report those prevent and planted acres.
Brian, we'll take a break. When we come back, I want to get your thoughts on the cattle on feed report that's going to be released on Friday. That's straight ahead. Stay right where you are on the Market Day Report. Brian Hoops, Midwest Market Solutions, here with us. Brian, what do you think about this cattle on feed report? Your thoughts, especially when we take into consideration some of these expectations that the average of the trade's already looking for?
Yeah, the market's kind of dialed in already, some of these numbers, I feel. So it's going to take a real bearish number to surprise the trade. We're looking for a little bit of a negative report with on-feed and placements above last year. Not a surprise, but I think the market's already trying to look ahead towards better export demand, and that's why we're seeing feeder cattle gain against the live cattle contracts here. That's been kind of the theme, and I think that'll be the ongoing theme. We're looking ahead to the summer months and even beyond that. That demand is really going to improve for beef, and there's a lot of people wanting to get their hands on some sort of a supply of that, and that's why we're seeing a huge demand for feeder calves right now.
February fats down 33, 121.10, but you go all the way out to August, we're actually up 25. So the front 3 months lower, the too far out the birds, August and October, they're higher. You mentioned those feeder cattle. Right now we're March 142 higher, 140.72. And look at that September trading at 152.90. Oh, so close. In fact, it got all the way up to 153.22. It's up 33. Brian, have you seen or heard anything on the cash cattle trade yet?
Well, it's been pretty quiet as far as any bids goes in the country. DTN does have some asking prices out there. They're looking at 122 in the South, 195 to 197 on a dress basis. The cattle exchange didn't have any sales. They had some asking prices around that 119 area, but there was no takers at that price level. All
right, moving on to the hog complex here. The lean hogs are all higher. Now, we were higher than this earlier today. There was quite a surge. We got up to 68.25 on the April contract. Now we're at 66.90, but we're still up $1.40. May is up $1.05, and the June is up $1.53. Why the pullback here? That there was that big burst of energy to the higher side, and then we just kind of faded a little bit.
Yeah, the markets have pulled back from their most recent highs. I think they ran into some technical resistance, and that kind of stopped the rally. I thought hogs would get a little bit of a boost from the weekly hog weights, which were down below last year's levels for the second consecutive week. That's a supportive number. Takes a little bit less supply off of this market, which is really a problem that we're facing. But I don't think these hogs can just rocket higher with logistics problems of shipping pork into China. That's really the wild card, is if they could get the logistics figured out, we could get the virus under control. I think we can start shipping a lot of pork. But until that happens, the market does not want to get too far ahead of itself, anticipating that it'll be cleaned up anytime soon.
All right, Brian, well, thank you very much. Always appreciate it. And Christina, here again we go. We're talking about the coronavirus. We're talking about shipping. It just seems like the hog market and some of the exports in general just can't get a break into that Chinese market. So we're going to continue to follow that.
Similar to what Arlen Suderman was saying, big
That's right.
blockages. All right, thank you. Appreciate that very much,
Yes,
John.